just over, within 1 year of today, that a year from now, after having very low defaults, 2% or so, we think, we'll have again around 8 to 14% defaults in 1 year. We may have a similar number in the year after that, so that would be 20% defaults in 2 years. So that's quite significant. These numbers are a little lower than the numbers we would have for the U.S. High yield market, and that's because the U.S. high yield market has many much lower rated issuers actually than we see in emerging markets. Emerging markets tend to have plenty of high yield debt, but not at the lowest part of the rating scale. And then the last slide I was going to focus on are the long-term challenges. If we get through the crisis, as we hope, and it reflected in what I would call a relatively positive outlook for 2021, that assumes we will have a healthy, if not fully robust recovery, we have many issues that are going to be aggravated by having gone through this crisis that are going to be more challenging to deal with. Unwinding the policy stimulus and dealing with the associated debt burdens that have been accumulated in every sector of the economy in every part of the world as a result of this crisis is going to be a great challenge. Dealing with from the poorest nations of the world and their challenges to the richest nations of the world and all the government aid that's been provided and the debt burdens that emerge. U.S.-China relations continue to suffer. This is turning out to be a further aggravator in those relations, and I know that makes things all the more difficult for the trading partners of those two countries. And climate change is not going away, and although we are reducing the carbon footprint by slowing our economies for a year or two here, it's really not changing anything about the trajectory. So the need to address climate change is ever as great as it was, and the resources available to do it and the political consensus around it may turn out to be even weaker as other issues rise to the fore post-crisis. Deglobalization and onshoring continue to be concerns, particularly for countries that are used to expanding growth through international trade. It is likely that we'll see at least the U.S. further pull back from international trade, and at least for key industries, more attention to being able to assure that the supply chain is solid at home and reduce reliance on international trade and specialization at the margin. I don't expect international trade to go away, but it will become an early aggravator. And I think I'm going to end on, of course, the most concerning, from my perspective, aspect of trends for decades now, but particularly aggravated by this crisis. All recessions, the pain of recessions are always borne disproportionately by the poor, and this recession seems as if that's going to be true again, both economically difficult, but also from a health perspective. There are very unequal outcomes, and I think as your country, as well as almost every country in the world, has been dealing with a call for action to address income inequality. I think when people come out of their homes and begin to focus on what the experience was through this crisis, the unequal outcomes, the review of where the money went through government programs, and the political influencers of those decisions that remain will be more fodder for protest, and I'm expecting very significant reviews of public policies around income inequality. Some of those will be done in a collaborative government, choosing to take this on and deal with it directly, and in some cases through political, real unrest, and that'll of course vary around the world and by country. And that kind of concludes my remarks. I think we, as I said, we will come out of this. We don't know whether the forecast that laid out will realize. It could be significantly worse, but I do think we will come out of it without, touching bottom and going into what would be the equivalent of the Great Depression again. And I know some people worry about that. We have these longer-term challenges. There is this unusual disconnect, seemingly, between financial market valuations and economic forecasts. The U.S. stock market, the U.S. High yield market, are really trading at levels that are consistent with a pretty robust recovery outlook, and without much concern about downside risk. One can say that they're inflated, by very generous government program and debt buying programs and so on, and it may turn out that further shocks to those markets are ahead. The other possibility is that we talk among ourselves about how horrible things are, and we sort of reflect on our personal experiences, and we don't get it right, and the financial markets have it right. I don't know the answer, but it is an interesting question, because the stock markets are really at levels that they were at 6 months ago. High yield spreads in the U.S. and I think more broadly are at levels they were, they're tighter than they were in late 2016 when we had the commodity price swoon. Or was that late 2015, maybe that was in early 2016. But so they're not at enormous crisis levels. So I don't know exactly why. Be interested in your thoughts. Just in terms of this presentation, if it makes the round, I'd have a long appendix here. And it's just material that's widely available on the IMF's website. But in case you don't haven't looked at that, each country's infection curve for the major countries in the G20, and then for Latin America, I've repeated all those infection curves and talked about summarizing the fiscal and monetary and macro policies that each of these countries have. So it's just a reference thing. So if you want to compare what's going on in Argentina versus Chile, both in terms of the medical situation and in terms of the policy responses, it's in the deck. So just wanted to share that. So that's the substance of my presentation, and thank you for your patience and hearing your questions. And I think it goes to Sergio at this point, right? Thank you.
Okay. Yeah, that's right. Thank you, Richard. It's pretty clear that we need to brace for a number of challenges in the near midterm, right? So hopefully, I guess there are some opportunities as well. So maybe we can talk about this later on after Sergio's presentation. But thank you. And I should have mentioned this before. Moody's is a member of the Chile Pacific Foundation. We are actually very proud of having you as one of our member companies, Richard. So thank you for that as well. So having said that, I give the floor to Sergio. And as I said, after that, we'll have some time for a Q&A. So if you want to write your questions and send me your questions through the chat, which is already available on your screens, just feel free to do it. Okay, Sergio, it's your time.
Yeah, thank you very much, and thank you to the Fundación Chilena del Pacífico for this invitation to comment Richard's presentation. Thank you, Richard, for your excellent presentation. I am trying to share my presentation here with some slides to basically support my comments, but I have some problem here. I'm not sure how to do it. It's okay now?
It's okay. Yes, go
Perfect.
ahead.
So first of all, Richard presented a very clear messages. We have seen a very dramatic change in the economic scenario. Just a few months ago, we were expecting for the world economy some increase in terms of GDP about 3%, and now we're expecting some huge contraction around 2% according to IMF. From Richard's presentation, I basically tried to present some outstanding or very important messages comparing with the crisis of 2008. First of all, we have a better institutionality in terms of balances in households. We have seen some improvements, but from the negative side, we have seen some lack in leadership in global terms. Secondly, we have seen some higher leverage in companies, then they are less prepared to confront this crisis. In terms of economic policies, we have seen a very limited space from the fiscal side. And probably in the future, we are expecting some slower recovery comparing with the 2008 crisis. In terms of the risk, they are basically biased to negative areas, and the reasons are clearly presented by Richard in his presentation. A very important dynamic of the recovery for the coming months is related clearly by the relationship with the sanitary evolution. We are seeing some improvement in terms of contagion. This graph presents a very huge correlation between the uncertainty related to the VIX from risks related to S&P. We have seen some decrease in VIX in the last months from levels close to 8%. Now we have seen levels close to 30%. And this graph presents that there is a huge correlation between this uncertainty and the evolution of contagion. In the left x, we have seen, or we see it in this graph, that the number of countries below 5% rate contagion, and as you've seen, related to the evolution of this contagion, we have seen some decrease in addition in the uncertainty in the financial markets. As Richard presented, we have seen a very significant decrease in the scenario in terms of growth. The left side graph presents the forecast that we have in January. This is the light blue bars, and in the blue bars we have seen, or we see the current presentation of the current forecast. We have seen a very significant decrease. Growth rate estimation today in terms of forecast is close to 2%. We are expecting a significant contraction also in the US GDP, 4%, around 4%. In the case of Latin America, also we are expecting a very significant contraction in terms of GDP. And for Chile, this is our forecast, we're expecting 2.2% decrease in terms of GDP, comparing with 1% increase in January that we are forecasting. So we observe a very significant change in the economic scenario very rapidly in just a few months. In the right side of this slide, we may observe the evolution of GDP growth from 1980 to date, and the evolution of GDP, including our forecast for Chile. As you see, and as you know, today, or the current crisis is the probably the deepest comparing with the Great Depression in 1930. In the case of Chile, this decrease, this contraction in terms of GDP is higher than the contraction that we observed in the subprime crisis, but it's not comparable with the 82 crisis. In order to confront this scenario, most of the countries have implemented very massive fiscal stimulus and monetary stimulus. In this graph, we just present some comparison between the fiscal package that Chile announced some weeks ago, which is close to 7% of GDP, which is in the middle of this sample. Probably, yeah, is related with our fiscal possibilities, given that we faced a very huge social unrest at the end of last year, and a part of our fiscal space was used in order to confront these requirements. In the case of some other countries like US, for example, or even Japan, or even some European countries, the fiscal stimulus and the monetary stimulus are even higher, close to 10% or 20%, for example, in the case of Japan. In average, the fiscal or the economic stimulus around the world is close to 8% of GDP. That means, which is around $8 trillion, which is the most massive stimulus that ever was implemented in the world economy. In the case of Chile, we have seen some very significant decrease in retail sales. This is some data from March, and especially in durable goods, which is also different from the scenario that, for example, we have seen in Europe and in the US, in the United States, in the US. Additionally, we have seen some very significant decrease in the case of, for example, automobiles, durable goods. In general, we have seen a very significant decrease from the side of commerce, given the restriction, the sanitary limitations that has a very huge impact on commerce and also in some SMEs. In terms of economic activity, the last data from Chile basically show a 3.5% decrease, which is significant. For April, from March, we're expecting some more negative numbers, probably close to 10% decrease in the economic activity in April, just a little bit less negative in the case of May. And for the rest of the year, we're expecting some very gradual recovery according to some evolution of the sanitary crisis, basically taking into account that part of the restriction going to be gradually reducing. In our scenario, given that we're expecting 2.2% contraction, we're expecting that will be introduced some flexibility in restriction from June to the next months. In terms of fiscal position, as you see, this is the forecast given by the Ministry of Finance. The expectation are 8% deficit for this year, fiscal deficit. And then probably in some positive view, the Ministry of Finance is expecting some improvement and some deficit close to 2.5% in the coming years. Probably this appears to be a little bit optimistic. As I said, we're expecting 9% deficit this year, and probably for the next year, the deficit is going to be close to 4% or 5%. As I said, the Ministry of Finance is a little bit optimistic, and given this evolution, is expecting 4% public debt at the coming years. In our view, it's going to be probably a little bit more negative, close to 50% of GDP in terms of public debt, and basically because behind the forecast of the Minister of Finance, there is some probably optimistic view in terms of the growth rate for the coming years. Close to 4.7%, for example, in the growth rate of 2021. So this appears to be clearly optimistic in terms of the comparison, or in terms of the forecast provided by other analysts, in particular the Richard forecast, which present a growth rate close to 2.5%. So in general terms, this view, which clearly represents a more deteriorated fiscal position in the coming years, appears to be a little bit optimistic. In terms of the growth rate, this graph presents the evolution of the growth rate in the last 2 or 3 decades. In average, it was close to 4%, 4.5%. But in the coming years, in our view, and this is consistent with the estimation that the Minister of Finance provided some days ago, we're expecting a growth rate close to 2% or 2.5%. So the last decade's growth rate probably is going to be part of the history in the coming years, given the huge decrease in investment that we're expecting, given that also we're going to have a weaker fiscal position, given that probably the world is going to be growing at a lower rate comparing with the last estimations, we are expecting a very lower growth rate comparing with the historical rate. In terms of the action rate, this is the real action rate. We have here some view from 1986 to date. We have seen a very huge depreciation of our real action rate. This is an estimation, and as you see in this figure, the current level is close to the maximum. So we are expecting some decrease in the real action rate. We're expecting some improve in the price of copper in the coming months. We're expecting that the growth rate in China is going to be improving gradually in the coming months. We have seen some positive signals in the last data from China. And then we're expecting that the real exchange rate is going to be gradually decreasing in the coming months. Anyway, the equilibrium level for the real exchange rate in case of Chile is going to be over the historical level. And the reason are basically because now we are in a weaker position in terms of fiscal standards, in terms of estimation for the growth rate in the coming years. In addition, because investment was very hardly hit by the, first of all, at the end of the last year, by the social unrest, and in these months by the global crisis. In terms of the monetary policy rate, we're expecting to remain in the current level, 0.5%, until at least the end of the next year, and then, just then, the Central Bank of Chile is expected to be gradually increasing the monetary policy rate. It's going to be a very gradual process, and the interest rates, this is the bonds issued by the central bank, has been capturing this estimation and then reducing its levels. In particular, the case of the 2 years bonds are close to historical minimums, and we're expecting some additional decrease in the case of the other bonds. This is our view for the Chilean economy in the coming years. As I said, we're expecting for this year 2.2 decrease in the GDP. This data basically captured that the investment is going to be decreasing by around 8%. We have a very strong recovery in the next year. This data or this estimation is clearly over the estimation provided by Richard. We are expecting some a huge or more stronger recovery. 4% is our estimation for 2021, which is also different from the estimation provided by the Central Bank of Chile, and which is also incorporated in the estimation provided by the Ministry of Finance. Even though we have some alternative scenarios, we are some optimistic scenario. We assign 12% of probability to be real, to be materialized. In this case, we're expecting 1.7% contraction in the GDP this year and some stronger recovery in 2021. In this case, the decrease in investment is going to be a little bit more moderate. And in this case also, probably the evolution of the monetary policy rate is going to be a little bit different from the base scenario. In the case of the base scenario, we assign a probability close to 50%, 48% to be more precise. We have some negative scenario, and this basically reflects the uncertainty that we are today facing. This is mostly related with the moment which will be considered in order to introduce more flexibility in the sanitary restriction or some limitation or quarantinas that we are facing today. In the worst scenario, we are expecting 4.7% contraction in GDP and very slow recovery in 2021. In this case, we are expecting a more significant decrease in terms of investment, 10% this year, and very slow recovery in the coming years. In this case, we're expecting a much more depreciated Chilean peso. In the other scenario, which is closer to the estimation provided by the IMF, we're expecting close to 4.5% construction in the GDP and some more dynamic or more stronger recovery in the next year. In this case, we're expecting also some decrease anyway in the investment, very significant in this year, but with the stronger recovery in the coming years. In terms of final reflection, some final comments. We have seen very huge changes in the economic scenario, and some cultural changes probably going to be permanent. We have seen, for example, some rapid movement to a digital economy. We have seen, as many of us working at home, and probably these changes are cultural, that part of them is going to remain in the future. We have seen some very significant advance, for example, in online transactions. So we have seen that some acceleration in the process that we are facing in the last years. Fiscal position is going to be much weaker, given that in general we are facing this huge economic stimulus that are being provided not just by Chile but globally. And then for the future, where we have seen or we see be a very significant challenge in order to deal with these fiscal weak positions. We are expecting in the near future also a reduced long-term growth. This is because we have seen a very significant reduction in investment, as I mentioned in our forecast. So again, thank you very much, and I think we are open for questions.
Sure, thank you, Sergio. This has been a highly comprehensive analysis of what we should be expecting for the Chilean economy this year, and obviously in the coming years as well. So thank you very much. A lot of insights from your presentation. I'm sure we'll be getting a lot of questions about many of the things that you have pointed out as well. So Thank you again, Sergio. So having said that, I will open the Q&A section. We already have some questions for our panelists. I'm going to begin with a question from Carlos. It doesn't provide his last name, so just Carlos. This question is for Richard. Richard, the question is, how far or how close do you think a real financial crisis is coming or in the very near future? So if you think that there is actually a financial crisis, a deep one, I guess, coming in the very, very, very near future.
I think it's a low probability. I think we'd have to have some real shocks first before we would have to even consider the risk of a financial crisis. By that I mean the outlook would have to be materially worse for some regions of the economy, of the global economy, then financial crisis becomes more material. So if this becomes a 2-year recession in some countries, then the burden of the loan losses and asset devaluations on key financial players could become more concerning. But I do think we have some very healthy banking system around the world. We have strong regulation, really a benefit from the global financial crisis. Now, there are a few countries that there's always in Europe a risk that political uncertainty about the willingness to support weaker members of the Eurozone could rear its head and create some crisis. Another way in which I think we could get more of a financial crisis is if second and third rounds of government support are required to keep the economies going, and people begin to question legitimacy of those support measures and the political agreements to keep going, to fade away. So, if, for example, continued support starts to require more bail-in, more defaults, more pain sharing with debtors and equity markets. So there's nationalization of industries, or a condition that first corporations have to default on all their debt before they can get more support. If that becomes a bigger concern, while there's nothing wrong with that in principle, if it changes everybody's expectations suddenly, if suddenly people had thought, this whole sector was going to be supported in a certain way, and now I no longer trust in that, then you get a flight away from all sectors. So that's kind of what happened, after Lehman Brothers was allowed to fail. Everything became questioned, and everything then had to be guaranteed. So that's the sequence that worries me. But I think we are, definitely some real shocks first away from that happening, and significant extension of the deep recession from current expectations has to first occur, and then doubts about government support would be the next trigger.
Excellent. Thank you, Richard. Klaus Smith-Hell, he wants to ask you a couple of questions as well, but by using his mic. So, Klaus, are you there? Okay.
Yes, thank you very much. Richard, congratulations for a wonderful presentation, sharp and precise, and Sergio, many thanks for your very insightful comments. For Richard, I have two questions. One is, I understand that the timing and shape of your recovery, looking at your quarterly forecasts, is such that the recovery will start in the third quarter of this year, meaning in 2 months from now. Now, I presume that is based on a pretty optimistic assumption regarding the end of the lockdown and or the existence of a vaccine and its widespread vaccination all over the world, and or a successful cure to those which get the disease. This seems to me pretty premature. So I'm asking you simply, how likely is it is that this recovery will start in the third quarter? My second question is about your industry and your company. Tell us, please, what would happen if all the world would have a significant increase in debt to GDP ratios of, say, 30 percentage points. The US going from 130 to 160, Japan from 230 to 260, Chile from 20 to 50% of GDP. If this happens all over the world, would you downgrade all countries? Or is this more of a relative type of downgrading, and therefore would depend very much on the other conditions and how they deteriorate or improve, other than your key debt to output ratio, which I understand is the most important thing which you normally look upon when you rate sovereigns. Thanks.
Okay, so on the first question, you know, we don't have specific healthcare assumptions built in there, but other than to say that we and, you know, the US and Japan, you know, the advanced economies will largely be returning to work, you know, in late summer and more significantly, of course, in the fall. We do see that some of the East Asian countries have been successful in using primarily testing, I would say, testing and tracing as the means to limit the spread of the virus, but it's very early days to see. So I think we're going to learn a lot from the experience of China and some other countries in Asia over the next few weeks about the ability to contain the virus as you return to work without a cure or a vaccine. So but definitely risk to the downside. Your second question is something, you know, we've thought about. I mean, we published right from, you know, about 6 weeks ago how we're managing our ratings right now in the crisis, and certainly for what we consider investment grade entities. We're really trying to look forward to 2-3 years from now. Where do we think they'll be, and not just, you know, downgrade everybody. It's a relative system, and we still think, you know, largely, you know, financial institutions, sovereigns, and utilities. These are still going to be the strongest entities, most likely post-crisis, and we don't want to move everybody down just to move them back up. Having said that, you know, there is an element of our system which is not just relative, but has, you know, absolute risk as a component as well. And so we do worry, as you say, that will we have to confront this question 2-3 years from now, that there's much more debt burden in the sovereigns. I think we will have to confront that. It is clear our methodology doesn't put nearly as much weight on debt to GDP as the press would lead you to think, or other, you know, just you know, we have 4 pillars of our sovereign ratings, which, you know, I won't go into the details, but debt capacity and debt servicing is only one of the 4 pillars. And even within debt capacity, there is debt to GDP, which is a, you know, a good measure, but we also put equal weight on the interest burden. And really, in the long term, to the extent you could count on interest rates being low now, not just longer, but for forever, which may or may not, that's an interesting question in and of itself. But the interest burden of these debts, you know, are likely to be less than we would have otherwise thought, given the now low for much longer outlook for interest rates, although there's some risk to that projection as well. Okay.
Thank you, Richard. Thank you, Klaus. I'm going to ask a question to Sergio now. Sergio, you pointed out in your presentation the cultural factors, right? That you're expecting a lot of you know, a great amount of cultural changes as well out of this crisis. So could you, I guess that, I mean, for example, I'm thinking about innovation, right? New technologies, all what we are forced to do now in order to work, right? What we are doing now with Zoom, for example. So can you elaborate a little bit more on that point? I mean, how would you connect, those cultural changes that you brought up in your presentation, for example, with the, all the entire impulse that we are now seeing in terms of innovation, new technologies, right? As a way to weather the crisis that we are facing now.
Sure. Well, in my view, we were in process, probably we were evolving to much more digitalized economy. In general terms, we have seen, for example, in the last years, that just, for example, 4 or 5% of sales were or were using digital application. Now we have seen a very rapidly change, and now probably it's going to be some more permanent changes in that sense. In general terms, this is incorporating probably more productivity. We have seen more efficiency. Those are changes that are, well, providing some positive insight to the economy. On the other side, probably we're going to see some changes in terms of labor force. As you mentioned, innovation is going to be key in the near future. It was also in the past, but probably it's going to be more demanding for the near future. We require to increase education in our population. We require to be more prepared for this new economy that the crisis has accelerate the evolution. So we have a significant challenge in that side. We have seen very significant changes. These are cultural changes, and as I said, we have some requirements from the side of education, just not in Chile, but obviously in emerging countries and also in developed economies.
If I may, a follow-up question on that very same point. Do you think that in Chile we are prepared for that change? I mean, for that cultural change, especially in terms of the, technological capacity, the digital infrastructure that we need to move that forward and so on?
Not completely. We require to increase investment in education. Also, we have to invest more in innovation. Innovation as investment as over GDP is close to 0.4%, which is 10 times below the levels that we observe, for example, in developed economies. So we have some significant challenge on that. In particular, as I said, in education, in innovation, and then the challenge for the Chilean economy is clearly very huge for the future.
Perfect. Thank you, Sergio. Now we go back with Richard. A question from Felipe Munoz. He asks, regarding economic stimulus packages, do you see a negative impact on the transition to a greener economy, as those focus mainly on the productive system and job creation?
I haven't really, to be honest, it's a great question. I haven't, been following that issue that closely. As I'm sure you know, in Europe, there's a significant effort to make sure, or to try to align the stimulus package with green initiatives. There has not been that effort in the United States, as you might expect, and I really haven't been tracking it around the world. I would tend to doubt, even if it was intended, the speed at which these packages have been put together and the primary concerns those who are putting them together, I would think they would not be high on the list. And to the extent, everything that's going on, both the loss of economic activity and revenue for governments, plus the additional burden of the debt, will be another reason why politicians will feel less enabled to put forward significant spending proposals to achieve the shift. Having said that, the one for those interested in, particularly concerned about these issues, there is the potential for changes in political alignment to emerge from a crisis like this. And that, I guess that could go either way. That could find you with a new government and forces that are less concerned about the environment or more, but change is something we should expect.
Okay. Another question for you, Richard. This one from Andres Fernandez from Chile's Central Bank. He asks, what is your assessment of the liquidity measures established by central banks in advanced economies? And two more follow-up questions. Have they been effective? And do you see any bottlenecks?
I haven't, it's been working overall, so I haven't personally been digging in all the little niches in the market where there may be bottlenecks in every country. So I can say it's generally working. We do have lots of engagement with the major central banks in the US, the UK, and in the Eurozone, where they're just as advisors, and I'm reaching out to many market participants, what are we seeing? Which are the pockets of the economy that might be under stress? So we do have lots of conversations, and we share what we know. I can tell you the civil servants in those countries are very focused on making sure pockets are adequately funded, and they've been very agile in adapting their programs as needed to deal with the bottlenecks that they've seen. Don't mean that there can't be prizes, but although in our country there hasn't been as much positive statements said about our civil service and the need for big government in recent years, but I think in the broader financial community, there is now greater appreciation in many economies for the good work that financial regulators and politicians are doing in this regard. Excellent.
I think this question could go for both of you, Richard and Sergio. It's from Fernando Reyes Mata. Bottom line, he asks about the future, the future of the relationship between China and the U.S. Are you foreseeing further deterioration of the in the level of their bilateral relations, and what kind of impacts that could have on the world economy, for example? A question on the future of the relationship between China and the U.S. We're seeing a lot of harsh statements from both countries, especially from the White House, regarding, for example, the alleged origin of the virus and so on and so forth. So there's a lot of discussion about this, and they were facing a hard situation as well before the pandemic. In the context of the trade war and so on. So, how do you see the future of the relation between China and the U.S.? We can begin with you, Sergio.
Okay, I think this is a key issue. Indeed, we have seen some increasing tension between China and U.S. In my view, given that the economies, not just US, but also China, has been very damaged by the current crisis, in my view, there is no other possibility than, improve the relationship between China and the US. US will require a strong China in order to recover. It's true that the US economy is a close economy comparing with, for example, China or other emerging economies, but anyway, it requires a strong world economy in order to improve its performance in the coming quarters. We have to remember that in November, the US has elections. So part of the discussion that we have today probably is related to that. Trump is, well, using China as an instrument in order to basically try to understand or explain the damage in the U.S. economy. But in the midterm, in the long term, U.S. requires China and China requires U.S. So in my view, at least, we have no other alternative, and I expect that we're going to be moving in that direction.
Excellent. Richard, would you like to?
Well, I certainly agree with Sergey that we won't be. It's not so bleak. I mean, there will be continued cooperation in years to come. But I do think the direction is still negative. I think while it's possible that President Trump is known for changing positions all the time, and so while it's quite possible to imagine, if he's reelected, that he'll have positive overtures to China at some point if he sees that's worth his doing. But I'm not sure that the Chinese are going to be as patient, as they have been in the past. So I think on the China side, I think there will be increasing concern about the stability of U.S. policy. And even if we have a change in administration, there will not be a full reversal of some of the, changing attitudes towards relations with China. So I am pretty negative about prospects of a really healthy environment between the two countries, but certainly don't expect either country to shut off relations with the other. That's not
okay. One more question for you, Richard. This one from Daniel Natburni. He asks, how far can the U.S. go with programs to maintain the economy alive? $3 trillion is enough? Would it be enough? What do you think?
I mean, what's the capacity of the? I mean, I think if the recession is delayed and we don't hit the targets that we've talked about, there'll be need for more support packages, and it is being recognized as like a wartime effort. People are using that analogy a lot around the world. I think there will be political consensus and there's financial capacity to do more, and so I think there's significant capacity to do further response. Yes.
Okay, I'm gonna merge two questions. One from Francesca Di Girolamo, the other one from Jose Tomasevich. They both ask you, Richard, about the your thoughts on the potential impact of this crisis, right? The pandemic on the coming U.S. presidential election. What your thoughts are on that point?
I don't really have insight there. I will share with you something that was kind of a little awkward for me, just in terms of representing Moody's, and that we have an economist who might have been a better guest for you, Mark Zandi. He's pretty well known in the U.S. And he published a study that showed that Trump was likely to win re-election, 6-9 months ago, based on economic environment in all the key swing states and the details of the election. So we had an economic forecast had supported Trump's re-election, and that's just it's based on a model, okay? But clearly the elements of that forecast, that model-based forecast, have changed dramatically. So I haven't seen Mark come out with his more recent predictions, but I would expect that model-based forecast, let alone our own personal views, have changed that dynamic quite a bit.
Okay. Sergio, I don't know if you want to add something to that, to what Richard said already. Perhaps if you think that there could be some change, dramatic change in the so-called international order. That's another question actually. I don't know if you have some ideas to share with us on that point.
Well, there is a chance of that. We have seen very weak leadership, global leadership. But in my view, globalization is going to be anyway in the near future the way that the world is going to be ordered in the future. We require a more globalized economy. There is a very strong data and very strong evidence that globalization contribute to the world growth and the increase in social standards. We have seen some challenge, or we see very significant challenge on that, given that in the last years we have seen, as I said, some lack on leadership. We have seen less cooperation, and this crisis is a reflection of that. Probably the evolution of the crisis is probably part of that is related to this lack on cooperation. We require that, and I hope that in the future we're going to be able to take this understanding, and we're going to improve in that direction in the future.
Excellent. So we still have 2 more minutes left. I would like to finish with a final question for you, for both of you, Sergio, Richard. Well, I think we can all agree that we are facing a pretty luminous scenario. But that said, do you see any opportunities coming out of this crisis for Chile and for the world in general? And if so, what would be those main opportunities? If you can just single out 2 or 3 of them, so we can finish in a more positive note as well.
Well, I think clearly the new way of working, new priorities, really create an environment where change can happen, more rapidly, because people's minds have opened up a bit more. So whether it's lifelong learning opportunities that we've been talking about for decades now, and using technology, whether it's just you're going to have a lot of people who are going to change careers as a result of this crisis, and they're going to be looking for new opportunities. So I think there is an opportunity to get new energy. We did see some of that in the global financials, where entrepreneurship, nobody's going to help me. I've got to figure this out. So I do think at the individual level and in industries, you're going to see a lot of dynamism come out of this. And then secondarily, I mentioned earlier, I think the political changes around income distribution issues and fairness are going to be brought to the fore, and that could have very positive or very negative outcomes, and it may depend a lot on your own value systems, how you're going to interpret those outcomes. But I think that's a dynamic area to come.
Excellent. Sergio? Thank you, Richard.
In my view, in this period of crisis, we have the opportunity to be more creative, to invest in innovation, to rethink the way that we are facing some particular issues. I think we have the opportunity to recreate some of the way that we are relating. So in general, we have to look at that. It's hard in this period of crisis, but there is a good opportunity for the future, and we have to identify them and invest and work hard. This is my view.
Excellent. So, well, there is still hope. There is room for hope, and that's good news for sure. Well, we have gone to the end of this webinar. thank you again. I think it's been really a great online meeting. Great insight, a lot of crucial topics to think about, to continue to think about and prepare for, actually, I would say. I want to thank you. I want to thank Loreto, Sergio, Alberto, the entire team from the foundation, all the participants, and of course, Richard, Sergio. It's been a great honor for us at the foundation. Hopefully, we'll keep in touch, and maybe, who knows, have you both again in a new webinar not long ago. So be aware of our next webinar. We'll be announcing it soon. Hopefully, it will be the first week of June. And that's it. Thank you very much. See you all soon. Bye-bye.
Thank you very much.
Bye-bye. Bye-bye. Thank you.